Hey, good evening, everyone. Wanted to jump on and do a quick stream with a few ideas about how to do research for system design and or for system developers. So I thought today would actually be a good example of how to approach this. Let me share my screen real quick. All right. So if someone were developing a system and for the sake of argument, we'll just say it's a breakout and follow through system. And they wanted to understand how to configure signals in, for any day, but how to calibrate expectations and what they should be thinking about when they get a significant breakout of the previous day's range and after the amount of time that we spent above the daily EMA here. So first, one of the things they would need to do is obviously collect data on this configuration, right? So an aging bull trend with lots of overlapping bars. And then they would need to start collecting data on gap sizes, gap locations, days that break out of the previous day's low. So there's a number of different inputs, the study inputs that they would need to collect data on. Today was actually very interesting because we had only a small gap down, which closes. We'll take a look at the context dashboard in a minute, but closes the vast majority of the time. And yet today it didn't. That's another input for this study. And then once you have all of that, then you can look at how signals perform, calibrated expectations, and how the context of the day uh, both evolves across the day, as we saw here, but also what you can expect for different periods. The opening 18, 12 to 18 bars, the middle of the day, and then end of the day. So let's take a look at the context dashboard now. So we had a small opening gap. So this is, for the sake of argument, we'll treat small opening gaps, both bull and bear, the same way. So anything less than 10% of the average daily range for the last 20 days. So only 18% of all days over the last 7 years had this. Then we want to know if we had, go down to regime features. So daily closes above the EMA. We are currently around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 17 days above the EMA. That's pretty extreme. So we'll just go with greater than 10 because, again, this is going to reduce our data set significantly. So now we're down to 100 days. And then we want to know what happens when you break out from the previous day's low. So breakout from previous day's low. So the way that this works is, any greater value greater than 0 represents the bar on which the breakout occurred. So if you were going to have a breakout occur at all, it would just be a value greater than 0. There's more useful ways to think about this and to hone in on breakouts during different periods of the day. So you could study, for example, breakouts that occur during the first 18 bars, that occur between bars 18 and 40, breakouts that happen after the midday reversal, a variety of different study parameters. But for now, we'll just look at values greater than 0. And then you have about a third of that full data set of 98 days that have both a more than 10 closes above the EMA, a breakout below the previous day's low, and a small gap, small opening gap. The one thing that I'm not including here is the gap close bar. So that value is 0, but I'm anticipating, actually, we can just take a look at it here. Yeah, on these days, the gap closes 97% of the time. So today was a 3% day. 91% of that occurrence is during bars 1 through 9. So today was not one of those high probability days. But once it started to occur, probability distributions changed. So now let's take a look at some charts that reflect this exact configuration. All right. So here we do see the gap closing. Obviously, we're not filtering those out because we have nothing in our data set. Breakout of the previous day's low. This day bears more resemblance to today, even though we had the sell-off into the close. One of the initial characteristics we can see is that there is, on at least 3 of the first 4, impulsive legs. So here, the break below potential wedge generates the parabolic wedge. Here, another parabolic wedge. Here, climactic breakout leads to reversal. This would be an interesting day to go study. Not a ton of similarity to today here. More similarity here. And one of the things that we can see is once the price structure, if we're going to close below the previous day's range, and so this was something we're going to go back and add to our filter conditions. But if we're going to get these larger breakouts below the previous day's low that close below the previous day's low, then typically they're breaking out of some price structure from the prior day. So what we can do here is go back and add the end of day close location. So the end of day to previous day's range, if it closes below. Now we're going to end up with a much smaller data set here, but yeah. So 11 days. Again, these are the less common scenario, but let's print this out. So here was breakout that occurred late, mostly trending trading range. Little more similarity to today, but not as much trading range behavior. This is the other one we saw more similarity. This was not. This is a bit more similar to today, but without the end of day sell-off. Again, a little more similar. But the idea is that with your study, that you would go and review all these charts, look at the different price structures that develop, when the previous day's low was broken, what price structures developed afterwards. Here, obviously, you have a wedge with a climactic final leg, 2 legs down, possible second leg trap. And after having printed these charts out, what you can do, there are a number of interesting options that you have to design subsequent or to continue developing the study, because the idea is that at this point, your study is not developed. It is not sound yet. You just have a few ideas. You want to figure out the thresholds where you see common patterns and expressions of the price action that are more transferable and will help you better calibrate your expectations when you see something, say, similar to today in the future. So we added a few days to this. Let's go up here. If we broaden this range, we may end up with a bit more data. Again, this is going to change some of the initial price action, but give us a bit more statistical significance in the data set that we can review. So now we'll have 35 days. Well, it'll print 30 days of charts that we could review for that have now closed both below the previous day's range, have a bullish or bearish opening gap, and which have been above the daily EMA for now greater than 5 days. So again, not all of these end up being bear structures, and we've had a few. Well, this is an expanding triangle trending trading range. Here's another trending trading range with some expanding triangle properties. Upper trading range, lower trading range, relatively tight trading range. Expanding triangle that becomes upper and lower. A bit more similar to today. But again, here, the gap closes. So if we really wanted to design a study that was going to reflect more of what we saw today, it would be a bear gap down that doesn't close. This is going to make a small data set. But again, worth having these cataloged for yourself. And again, you can always expand your, the categories. I think I closed the one that I wanted to print. Let's see here. While this is loading, does anyone have any questions about the process of developing this kind of a study? All right, we'll keep going. So here we got the gap down, but trending trading range, no major breakouts. So again, we didn't. This is a gap down and all of the trading below the previous day's low, but without any leg count resets or significant trending behavior. This is bear channel, bear channel. This again, a bit more similar to today, but that's because I have 0. I should have had a -1 there. Again, a bit more similar to today, but still with more trading range behavior and no continuation lower. Similar kind of impulsive price structure, but nothing like today. Nothing like today. So one of the things that we can then determine, having gone through and configured all of this, is that once today occurred, it was and let me just go back and share my screen again. Not the right one. There we go. So the principle, though, here is that once this breakout occurs and we get the climactic legs lower, we know that if we go back and after we see a day like today, like let's say there was some point in this that confused you, perhaps it was this bull trap reversal bar they got subsequent bars of follow through, or this 5-bar micro channel that reversed to test the EMA, or maybe the end of day sell off. If any of this was confusing, then one of the things that you can do for developing a market research study in order to determine how to trade your signals is to take the days that are confusing and spend time with them. Develop different permutations of the characteristics the day expressed, and just study those and keep printing charts and keep returning to different nuances of them in order to see enough of the charts that reflect the behavior that tripped you up, or that you couldn't really reconcile in real time. And then perhaps you have like an NinjaTrader market replay or something where you can go back. The unfortunate thing about TradingView is that you only have a little over a year of 5-minute data. So I use NinjaTrader, and I have lots and lots of market replay history there. So if there's anything that I want to return to, or if I go through the printable charts and end up with something that I don't have, I can't refer to in TradingView, I can also pull it up in TradeStation or in any of my other charting platforms. But I can multi-charts, especially now, which I just picked up. But the idea is that you can use the context dashboard to identify the days, look at the price structures, configure the AMA breakout paint bar to show you exactly the kinds of signals that you want to be trading, and then go and study how they behave. Here we have breakout and follow through that gets follow through here. So 3 bars after this reversal bar. So depending on how you're treating reversal bars in your signal, this is likely a pullback entry, which does get its depending on how you're treating the profit targets, could possibly get you out here. Probably should have. And then same thing here, depending on how you're treating it, and especially how you're treating follow through bars. But then here you get this climactic leg and no, high quality follow through bars and reversal, breakout, and follow through. So these are the kinds of places where you want to study what kind of follow through you're getting for your bull signals, and what kind of follow through you're getting for your bear signals. There's neither of these were bear breakouts with follow through. Bear breakout and follow through got a measured move lower. Bear breakout and that's not bear. Depending on how you treat this bull trap reversal, this breakout got follow through, a measured move of follow through. Outside bar and follow through did not get a measured move, and ended up generating some of the initial parameters for the trading range, actually, which was more constrained by the bull trap reversal and this end of day. The bears who had to sit in their positions for so much of the session. So going back and just determining the study characteristics that you want to use to better understand these conditions will allow you to quickly move through many charts, many different variations on this condition. So for example, you could just say closes below the previous day's low, or closes below the previous day's low. That's one of the input parameters for the context dashboard. So not just the immediate session, previous session, but the session prior to that. So let's take a look at that real quick. We'll clear these. All right. You just asked, is there a set of categorizations that can be used to classify each day? If so, I would imagine that there are a few for beginners and a lot more for advanced, e.g., I think. Yeah, I mean, there's to classify each day. I mean, it depends on uh, how much you want to, deal in the subcategories that the day can express. So if you want to just categorize the entire day as either a variation of a trading range day or a variation of a trend day, there are obviously categories there. Then there aren't that many. But if you wanted to define the phases of the day, so if you want to deal with the opening range, so if the opening range is an expanding triangle or a triangle, if it is, if you get a reversal or a breakout, I mean, obviously breakout reversals are breakouts, but if you get an opening reversal versus just a tight trading range and then a breakout of the tight trading range, if you have small pullback behavior during the day, but that does not lead to a small pullback trend. So like there's a lot of flexibility with how you define the sub classifications within the day for the different market phases. So obviously you can do that once you feel more comfortable identifying those. But before then, I think it's a really useful exercise to just look at every chart for the last few years and categorize it, and then look at the common the different price action characteristics that those different variations of trend and trading range days express. And here, let's take a look at, so end of day. So this will be the current session closing below the low of the 2 sessions prior. So that's the previous day filter. And then if we want to say, just be a little bit more flexible with our search parameters, to say that the gap did not close, gets us down to a smaller data set, but let's just take a look at this. Any questions while this is coming up? All right. So here we have fewer characters. Oh, you know what? Hold on one second. I'm going to refresh this. I actually just found a bug in the code today that preserves the state of the filter list. So I'll show you what I mean. So when we had filtered previously, the number of filtered days was correct that it would return, and so that it would use to print the various charts that you'll get. But it had preserved all of the filter criteria that we had used for those previous filters that it shows on the left margin of the chart. So if you notice, these were, did I not get that in there? Hold on. Oh, that's why it's not showing it's not printing the previous day's ranges here. So there are 2 current bugs in this, the chart filter logic that I need to address, but it's printing the correct charts. So we'll go through here and take a look. So this is closing below the previous day's low. So previous day's low, not the previous day, 2 sessions prior low. But the gap did not close, so bull reversal. Same thing here. This is in a bear trend, bull reversal, so pullback day, bear, pullback day, so still within the previous day's range, but below the prior. Same thing here. So this is one of those initial filter criteria that you could use to generate a pretty meaningful study. Understanding that once you've this is also breaking out of the previous day's low. So this day as a pullback day after this bear day gives you some context for how to treat the day immediately following a bear trend day, which you could go back and study each of these, but they most likely are. So how many of these had successful, of the pullback days, how many of them had successful counter trend bear legs? How many of them had tradable bull legs? So most of them were bull. Here, one climactic leg, but then trading range. Let's see. Pretty balanced trending trading range day. Bull reversal day. Pullback, pullback. And there is one feature that in the future we will be adding to the context dashboard. I'll have a separate calendar input up here so that you can just print the day for a specific day. So if you find, some like here, this, and you really want to know what the previous day looked like based on the patterns that formed here, you can just go and put in that date, and it'll print that day too. So the idea, though, here is that as you spend more time going through the context dashboard during whether you're a Systems Academy student or not, or not even using the context dashboard, just developing the studies on your own based on the same principles. You have identifying some high value context inputs and then configuring a study around them. The unique value of the context dashboard is just that it allows you to iterate through ideas very quickly without needing to either develop code or spend a ton of time scrolling through charts. But it's totally doable without it. It's just a matter of efficiency, really. So going through thinking about those high value principles that you want to better understand, perhaps days that have a gap up in a bear trend and the gap doesn't close. What are the actually let's just take a look at that as an option. So between 1 and actually this is another way of configuring study parameters. So if you want to understand what the distribution ranges are, so the most common distribution range for gaps is between 25 and 51% of the average daily range. Below 0 to 12 is only 21%. So this is a full 60% of all gaps occur within this range. So if we say a gap of 1 to 50%, it's probably not that useful. Let's do 12.75 to 51. Because gaps of less than 12% express different behavior that is not useful to lump in to the rest. All right, so we'll see here. So 30% of all days fall in that range of bull days, right? So these are bull gaps. And the gap does not close. All right. So here's the study and gap of, well, we don't know exactly what this gap is. This is another thing that I will be adding to the charts themselves. So I have a list of, as you might imagine, a list of things to continue developing for this, but adding the opening gap percent here, according to the same metrics that we use in formatting, it'll come in the coming months, certainly before the public launch of the context dashboard. But here we can see, go and study the days when the gap didn't close. And perhaps these are the days when you would want to go and look at the price action on the day prior. And the more that I think about it, the more useful it would be to actually have, rather than just a single day here, to print charts from a range. Actually, never mind, you could do that now. I just thought of a way you can use the existing structure. So you could just go in here and say, and now that we have these printed charts, if you wanted to, this is 4/17/2018, you could say print the prior 10 days. So we'll go down to, let's just go to the first of. Okay, so we'll say, I forgot what the scrolling options are. That's right. All right, well, we'll just scroll here. So January, so this is, what was the date? 4/17/2018. 4/17, so we'll go from Monday to, and then we'll just print those charts. So this way we'll see, this is obviously your, wait a minute. All right, well, I'll have to figure this out. I think that should have printed 49. Okay, yeah, that only printed the charts that meet those criteria within that range. So if you were going to use this, you would just have to clear those parameters, and then this should work actually. Let's just try that real quick. Do some general exploration here. It's 5, so there should be about 14 days. Yeah, here we go. So the second, third, fourth. Okay, so I don't have to do any development. I just have to explain how to do it. All right, cool. So so now you can see what the days were leading up to the day that you really want to understand. And so if this is your day, 4/17, you'll know that this was the end of the day, right? These two bars, and that it was a gap up day also that did not close the gap. Again, so we had 2 consecutive gaps up. Then you can go and study that. What is the effect of the previous day's gap that did not close on the current day? What is the probability that the gap will close if the previous days did not? And you have a gap up of between 12.75 and 51% of the average daily range. So then your study is this, and you can go and print out as many charts as you need, or again, don't have to do it here. Just do it in your charting platform, and then study signal behavior. How many bear breakout and follow throughs reach measured move targets? None, really, depending on how you're taking your measured moves here. Here, arguably none. Here, this one does. This one does. So 2 reach measure move targets. This one does not. This one probably does. This one does not, and does not. So again, how do you treat signals that are counter to the current regime if you have a gap up that has not closed, by whatever bar? And so then you can add time components to it. And the more time that you spend thinking about the charts that you printed, the more opportunities you have to return and add features to your study, such that you can iterate pretty quickly by just adding a new feature and better understanding how that operates in the context of the previous understanding you had of, say, a 2 input condition. Add another third, and by the time you have 3 or 4 context inputs, you have a pretty sophisticated understanding of the effects these things are having on your signal performance and your expectations for day structure. So if no one has any questions, we only had one this evening, so ask away if you have any. But if not, we'll join you again sometime later this week and probably talk more about signal research and study versus the more context component of it. All right. Then have a good evening, everyone. Talk to y'all soon.